Today, I'm going to show you why your supply and demand zones keep failing and why price is literally shooting through them as if they don't even exist. And I'm going to show you exactly how to identify the right supply and demand zones and how to identify when a supply and demand zone is actually a smart money trap, what I like to call it. So what I mean by this, by a smart money trap, is zones that seem to look like a supply zone or a demand zone, but are actually a trap to smart money traders. And the reason why I call this a smart money trap is because it is so common that I see in the market people falling for these zones. So I'm calling this a smart money trap because a lot of smart money traders, I'm going to say that I trade a lot of concepts that come from smart money, but a lot of smart money traders tend to fall for these zones. So I'm going to try to go through this, give you the exact criteria, how to figure out if your supply and demand zone is actually correct, and how to figure out if your supply and demand zone is actually a smart money trap. And by doing this, I'm going to show you that a supply and demand zone is only valid and can only really be used if you pair liquidity with it. And what I mean by this is that the reason the market moves is not just because of supply and demand, but because it moves from liquidity pool to liquidity pool. If there was no liquidity in the market wouldn't move because the whole market revolves around liquidity. So I'm going to go into detail and show you exactly what I mean by this. So now I'm going to break down on the charts how to find the actual correct supply and demand zones and how to identify smart money traps. So right now I'm going to go through the chart as if I'm just a normal smart money trader, some trader that's quite new to the market, and why you would fall for these types of zones. So right now we're seeing the Asia session form. So what this little blue box is the Asia session forming. And what a lot of traders do, especially smart money traders, they wait for Asia session to form and use Asia high and Asia low as liquidity. So they wait for either side of Asia to get swept, coming into a supply zone or a demand zone, and then reversing from it, trading exactly from it. I'm going to show you exactly why so many people actually fall for this when it's very easy to actually tell. So a lot of time what would happen, they would do their analysis, they would think maybe, okay, we're maybe bearish for the time being, and they would see and look in the market for valid supply and demand zones. So maybe they might be seeing, okay, they're thinking maybe this is a valid demand zone. Let's mark that as a demand. And they might think this high up here is a valid supply zone. So the thing is, it might look like a valid supply zone. It's created a nice high. It's leaving with a lot of selling pressure. It's left a very clean high, maybe thinking, okay, this will be our valid supply zone. And what they wait for price to come into here, show them some sort of rejection and trade exactly from it. And I'm going to show you exactly why that doesn't always work. And I'm going to show you the reason why these things can look so deceiving, but are very easy to spot in the market. So let's actually put it as if a normal trader would do. So they would mark out here, they would say, okay, when it comes into the supply zone, I'm going to trade from it and sell it to the Asia low. So they wait for price to come into it. Now, London session is opening around this time. So it's 8 a.m. London session is opening. Prices came exactly into this supply zone that people try to call it. So you might be thinking, this is perfect. London session opening, so we're going to have that volatility from London session. There's a supply zone. It swept Asia high, so they're thinking, okay, this is perfect selling opportunities. Whereas for myself, I would have seen something different, but let's see how it plays out. So it comes into it, given some sort of rejection, you're thinking, okay, good, this is now giving us some sort of confirmation. London session is now 1 hour into it. Now it's went a few hours into it. It seems to be consolidating quite a lot. And then you're waiting. And then what price actually ends up doing is taking us out. So now what most traders would have been doing is they've gone into this trade. It's consolidating. And then they're wondering, should I get in this trade? Should I get out of it? What should I do? And they end up waiting for about 3-4 hours just to get stopped out when this could have easily been identified. And let me show you exactly why this is not a valid supply zone and it didn't hold. So let's delete everything right here. Let's delete this demand zone and focus solely on this supply and demand zone. So let's go back exactly here. So one reason of my criteria that I'm going to show you how to identify a smart money trap is this. So my first checklist, I'm going to make a checklist. I'm going to have checklist right here. Okay, so number one that I want you to identify is if the actual supply zone caused a break of structure. And what I mean by this, in this market right now, you have the actual low that created the high, and then you have the high that, if this is a valid high in an area of a supply zone, this high would have broke the previous low. So what I wanted price to do is to actually go onto the previous low and break it, which clearly it did not come down and break the previous low. So right now, that's checklist number one. So did it make 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 a BOS. So did it make a break of structure? That's number one of my checklist. Number two that I like identifying, did the supply and demand zone come from an inducement? And what I call an inducement is when on the lower time frame it has a buildup of liquidity, then it has a minor inducement, so it's taking that liquidity and then reverse into a downside. So we can jump on the lower time frame, like maybe 3 minute or anything like that. And as we can see, price did not have any sort of inducement on the lower time frame because it did in fact build up some sort of liquidity right here. It had a nice some area of liquidity, but it did not come and induce that to then continue lower. So that's another one of my checklist, like anti-checklist, what you want to be looking out for. So did it make an I'm calling it induce, so I would put it in DC, so I'm not going to write the whole thing. Did it make an inducement on lower time frame? So it did not make an inducement, and clearly that might be the reason why it did not continue to the downside. So my third thing that I like seeing is price an area which could make it a trap, in the sense of it's an area that's most likely to get taken out instead of reacting from. So in this case, it is a valid area. There's no reason for me to kind of look at this. If it already had a break of structure, it had an inducement, this would be very easily for me to see and say, okay, this is a valid supply zone. But for me, what I would say is if it was this day's Asia session, and let's say we zoom in on the lower time frame right here, and let's say we have some sort of zone at the top of Asia session, I would say this is potentially a smart money trap. The reason why that is because there's so much liquidity laying at Asia high and Asia low. I'm expecting for that liquidity to be taken out. So that's another part of my criteria. So if you see some sort of zone that's looking really good, but it's inside of Asia session at Asia high or Asia low, just or like a little bit below Asia low or a little bit above Asia high, like this zone right here, you might be thinking, okay, this looks like a valid zone, has a lot of selling pressure, broke the lows right here. But in fact, this zone is actually at the high of Asia, which you could be expecting for it to just shoot through. So this is another thing that I like to look for. If it's close to Asia high or low, if it's quite close, I try to stay away from it. So is what is going on with my typing today? Is it close to Asia high or low? So that's what another thing you want to be spotting and trying to look out for, because if it is quite close to Asia high or low, that could mean that price will just shoot through it because there's so much liquidity laying in these areas. So this is like my 3-step checklist. I kind of try to look for smart money traps. And this, in my opinion, does look exactly like a smart money trap. So it's matching up this checklist. Did it make a break of structure? No, it did not. Did it have a inducement on the lower time frame? No, it did not. So this is another reason why this is giving me more smart money trap vibes. So we're going to mark this as smart money trap. And let's actually see what an actual supply looks like in this scenario. So let's look at some previous examples. So as you can see, we'll go to the place above it. Here we're having something that's having a lot of selling pressure, and you might be thinking, okay, this is an Asia session, but this is previous days Asia session, which I don't really think matters as much. I would only care if it was in this day's Asia session. So if it's today and there's a zone inside the Asia session, I'll stay away from it. If it's like 1, 2, 3 days ago and it's inside the Asia session, it doesn't really matter that much. So, but let's see from this area and this zone. So clearly we're having some sort of high that was made in the market. So we want to use a similar checklist. So in this sense, did it make a break of structure? Yes, it did, because this low created this high. It came back down and it did actually, in fact, take out this low. So even though it was by like 1 pip, that is still taking out the low, because it took it out right here, but you can even say this considered another thingy. And I'm one of those traders, I don't wait for this whole full candle close to confirm that it's broken in a section. If liquidity has been taken in some way, it has broken past it. Either if it's taken or it's a break of structure, it still has went past it. So a wick is enough for me to say that, okay, prices went past this point, so it did not hold. So this is clearly a break of structure to me to the downside. So we've had that break of structure, so let's mark it out. Step number 2, did it have an inducement on the lower time frame? So let's go into like the 3 minute, or you can even go like 5 minutes. So right here, we did have some sort of buildup of liquidity. You can even say it's like trend line liquidity, which you've had like 2 trend lines right here. So you've had a high, and it's built up, shot past it, and then reacted from it. So it did have some sort of inducement on the lower time frame. So we've had that inducement on the lower time frame and then reacting from it. So that's another tick in the market. And then the last one that I would like to say, is it close to Asia high or low? This is the recent Asia high that we're talking about. So it's not close to the Asia high as it's past it. And now I'm going to give you this is like a secret that for some reason nobody knows. And I don't know why not many people know about it. So right here, let's mark this out. So the way I normally mark supply and demand zones is looking for the very last candle before it starts going bearish. And what I like to have before it, so I like to have the candle, which I like to have some sort of engulfed candle, meaning that the candle that I'm marking out is much smaller than the next candle. And another thing that I like to have as a confirm, as like this is quite a clean supply and demand zone, is that the candle going down or up, depending if it's a supply and demand zone, is leaving some sort of fair value gap behind. So this is leaving some sort of fair value gap. So we've had the supply and demand zone. I've marked out this kind of engulfed candle because the other candle after it kind of engulfs the whole candle. And then it leaves a fair value gap behind. So this is giving me an indication that this is quite a clean supply and demand area. And now I'm going to give you the actual recipe on how to find out the correct liquidity. This is the thing that I was trying to say earlier on, in the sense of that when you pair liquidity and supply and demand together, this is where you're going to find the best supply and demand zones, and you're going to find the best reversals of all time. So what I meant by this, so you might be thinking, okay, so if this is a smart money trap, what are we expecting price to do with it? We're expecting price to push through it. So that means that price, instead of respecting this area, it actually was heading for this liquidity up here. So it was not respecting it, and it was heading for the liquidity. So instead of respecting the supply and demand zone, is coming up to take this liquidity to fuel itself back to the downside. So let's see what actually happens with this price action. So we're waiting for price to head to the upside. It gave us that fake reaction. So why I call that a smart money trap, because it traps traders, smart money traders, to get into sells. So it came in, gave a fake reaction to then actually take out them traders. So now it's took everyone out. It's taken on some liquidity. And now what it does, it comes into our actual supply and demand zone, which we actually marked out because it checked with everything in our list. It went one by one, checked through everything. Everything lines up. We've had that break of structure. We've had that lower time frame inducement. We've had this, what I can call it, I can even call this RIFC. What I call this is a refined institutionally funded candle. So this is a institutionally funded candle. When you see these big candles leaving fair value gaps behind, it is most likely funded by the institutions to move in a certain direction. So this is just a refined version, finding that area where the supply zone could be laying. So it's got that refined institution funded candle, and it's also it's not close to Asia high or low, so it could not be a smart money trap. And it's kind of lining up with everything. Now prices came into it, plus we have liquidity. So we have liquidity laying just before the supply and demand zone. So what it's doing, price is taking out liquidity, so it's fueling itself with stop losses of sellers. Of course, the actual institutions are not going to be targeting us. They're going to be targeting much bigger banks and stuff like that. But people can be caught in the crossfire. Like I said, smart money traders could be caught in this crossfire thinking, okay, I'm safe putting my trade here and covering the highs. Whereas this was the actual stop loss that banks are going to be trying to attract, because a lot of maybe smaller banks, a lot of brokers might be trading this way. So banks are trying to target all this liquidity to actually head to the downside. So what you could be looking for is liquidity that's marked before the supply and demand zones, because this is going to give it enough fuel to actually react from the supply and demand zone and continue in the direction that you want. So let's say we now broke past liquidity. We went into a lower time frame. And then now it's giving us some sort of reaction. So whatever, depending on what your strategy is, you could be trading exactly from the supply and demand zone and then trying to see if it's hitting maybe above London low. And let's see what price does. Price probably does shoot up a little bit. Let's go in the 15 minutes so it plays a little bit quicker. And then price heads for our TP. So This is what I meant by finding a valid supply zone or a demand zone, because with a demand zone, it's the exact same thing, just flipped around. So this is how you're going to find the exact supply and demands at work, and how to identify these smart money traps, the areas which look like a supply and demand, giving you a fake reaction, and then actually taking you out to make the real move and continue from it. So this is something you want to have a look for in the market, because I see so many traders trading from Asia high sweep into a supply and demand and looking for the very first, you can call it an order block or a supply and demand zone, and then trading exactly from it when there's no reason for price to move in that direction, because we've not had any major liquidity taken. It doesn't actually line up with what a supply and demand zone is, and it's very easy to fall for. So I can understand why a lot of smart money traders fall for this, or just general supply and demand traders fall for these type of areas. But this is something you want to be careful for in the market, and you want to make down this checklist. You can even add a little bit extra things if you want to make the list a little bit longer and just to be extra safe. But this is what I kind of technically look for in the market every single day, and I think this is what's going to help you the best. So hopefully this will help you guide more profitability into your strategy, and hopefully you can add this somehow. And let me know if you want to see anything else about my strategy in the comments, and hopefully this simple tip will bring you many payouts and many accounts passed in the future. So let me know if you actually managed to win a trade with this, or if this is actually working inside your strategy, and I will see you in the next video.